Hello and welcome to Onward. My guest today is Rob Johnson. Rob, along with George Soros and Stanley Druckenmiller, are famous for breaking the British pound. If you'd like to hear that story, Rob did an episode of Onward 2 years ago on March 17th, 2023, where he shared the full details and took us behind the scenes, how they made $1 billion in a day by taking on the Bank of England. On today's episode, Rob shares a story most people don't know of how 2 months later, they went on to make even more money breaking the Swedish krona. Rob is one of the most successful currency traders in history. I invited him on the show because I wanted to ask him about the Trump administration's plan to reshape global trade. His answers surprised me. Before we get started, I want to remind you this podcast is not investment advice. It is intended for informational and entertainment purposes only. Rob Johnson, welcome back to Onward.
It's a pleasure to be here once again.
So before we dive in, I thought it'd be useful for people to just get a little thumbnail of your background, because I can think of few people who could give better insights into what's going on in the world than you today. How do you usually describe yourself?
Just a quick thing. I grew up in Detroit, so I know what suffering's about. And with automation, machine learning, and globalization, I saw a lot of distress. So I don't believe the economy is always at its highest and best place. And some of the tensions that we see in America now are vivid. I remember going to college. I went to MIT, and the first time I was in an economics class, I was not trying to be a smart aleck, but I was listening to this guy, and he was talking about equilibrium. And I raised my hand, and I said, I grew up in Detroit. I don't have any idea what you're talking about with equilibrium, because it was just continuous turmoil. And a lot of my parents' friends were either alcoholics, there were suicides, there was a lot of distress as businesses associated with manufacturing were being crushed. Subsequent to that, I did degrees in electrical engineering and another degree in economics, working with Morris Edelman, famous oil economist, and Charles Kindleberger as research assistant. I also took a nice series of courses, but didn't finish a master's degree in arms control and disarmament, which was a big theme at MIT. Part of the reason for that is I got a scholarship, so I went to Princeton, did a PhD in economics, focusing on international finance and international trade, and worked very closely with Professor Bill Branson, Alan Blinder, Joseph Stiglitz, and a couple of others. But probably the best luck I had was there was an international professor named Peter Kennan who used to take me fishing, and he had this big, tall buddy that went fishing with us. His name was Paul Volcker. And Paul Volcker eventually gave me access while writing my dissertation to income working at the Federal Reserve. And I was there for a little while. I guess I would say I became engaged to the woman who in the 80s was the head of Japan analysis. And she was very, very powerful, capable. And Volcker said, you shouldn't be in the same place as your wife, and I need her. So he helped me get a job with Pete Domenici as a senior economist of the Republican majorities at that time, Senate Budget Committee. When they lost control of the Senate in '86, I moved across and became the chief economist of the Senate Banking Committee through the time of the '87 stock market crash and the savings and loan bailout. When Senator Proxmire retired after I'd had about 7 years experience on the Hill, I moved up to Bankers Trust Company, working in foreign exchange trading, starting as a strategist and then evolving into a partner with a man named Norman Weinstein, who was a grandmaster in chess, and we became an asset management team in international currency work. And in the scheme of that, I had met George Soros, along with all kinds of other people like Warren Buffett and others, during the '87 stock market crash, because these people all wanted to give me advice about how to run the hearings to illuminate what had taken place that led to that crash. And I stayed in touch with George Soros. He brought me over and met with him and his extraordinary partner, Stanley Druckenmiller, who I always said was the Michael Jordan of traders. He was better at macro than anybody did equity, and he was better at equity than anybody that did macro. And he was a really extraordinary talent. And about a year later, because of things going on in the European system, and Soros had detected at Bankers Trust I had been involved in a Finnish market devaluation, they invited me to join them. And then we went through very quickly, within a few weeks, the British pound devaluation and then some other things related to Spain, Malaysia, and the Swedish krona. And I guess I would say I stayed with that for a few years, and then I jumped out, went back to the things that inspired my mother and father, which in Detroit was music. My dad was a physician, but very involved with Berry Gordy and Marvin Gaye and that whole crowd. And my mother was executive for the Detroit Symphony. So I went and worked in blues music and worked in documentary film related to musical artists, and then ended up teaming with Alex Gibney, who we made a film called Taxi to the Dark Side. It was about the use of torture. And we were recruited by members of the military, JAG officers and stuff, who said the use of torture is a bad thing. Many of our soldiers, when they're deployed overseas, know that they would be tortured too if we adopt that. So they asked us to illuminate why that was a bad thing.
I love hearing your stories because you're just so connected to so many people. You're an insider, but you're also an iconoclast. And that's usually rare. I feel like most people, especially these days, there's so much skepticism of elites and of institutional power. Here you are, I'm going to just say, probably I'll describe you as an elite from institutional power, and you've done more than most people to try to shake up the system.
Well, I guess one has to find within yourself what's your sense of purpose. And I felt perhaps as I started this conversation, the scar tissue of growing up in Detroit, watching Dr. King give a speech 3 weeks to the day before he was murdered at the place I'd eventually go to high school, being around gunfire and sandbags and military officials during the 67 riots, and seeing the depression associated with the disintegration of the auto industry. I don't mean it fell apart entirely, but it was under compression through the pressures of globalization. Obviously, people were buying more European cars, but particularly Japanese and Korean automobiles. And nobody in Michigan felt like the federal government was trying to help them. They watched them bail out Wall Street, but they didn't feel like they got any help.
Did happen a few more times in your lifetime. 2008 for me. And the interesting thing about Detroit, people don't realize that Detroit was the richest city in America in the 50s.
By the late 60s, it had had more cabinet level officials from Detroit than any other city in the country over the history of the Republic. Basically from Henry Ford to the 68 election, Michigan people were always appointed to top level places. Robert McNamara, Secretary of Defense, he was a neighbor when I was a kid, lived across the street.
Every time I talk to you, you seem to have good neighbors. I'll try to bring up the one you just mentioned.
Maybe I ought to go work for State Farm then, right?
Something like that.
Like a good neighbor.
I want to ask you about the country and some of your maybe policy recommendations to deal with the challenges of today, because as you were saying, Detroit was the engine of America and went through decline. And maybe I'll even ask you counterfactual what the federal government ought to have done in retrospect. But let me go back to something you skipped because you were so modest about it. But you and Druckenmiller and Soros broke the British pound famously. The last episode we talked about that, so I won't get too much into it, but it's an incredible story. And also, the last episode off the record, you talked about how you did it again 2 months later with the Swedish krona. And that story wasn't really, you said the lesson learned was you didn't talk about it the second time. So there's not much out there.
No, I think there were two dimensions. One is the British pound used to be the central reserve currency of the world system. The Swedish krona was never that global store of value. So it wasn't as vivid as when the British pound came down. And the second was with all the things going on in Europe about creating a euro and the strength of Germany from the world wars and all of the polarities that had been healed. UK-Germany thing was symbolic of a transformation, where Sweden was just considered, which I might call an adjunct to a system where the politics and controversy had taken place elsewhere.
Breaking the reserve currency. Well, let's come back to that one too. But before I want to ask you about, well, let me just do the Swedish krona, because I feel like you promised me that story.
It's relatively simple. The Swedish companies were inside of Sweden, but also investing around the world. They were becoming multinational, cutting-edge companies, Volvo cars. But there were many, many companies that were competitive internationally. The second thing was I guess because it was a smaller country and not well known, the interest rate had a certain illiquidity or risk premium associated above and beyond things like UK, France, and Germany. So that created what we call a carry trade. If you borrow Deutschmarks and invest in Swedish krona, you earn 3 or 4% per year just by hanging out. So a lot of Swedish people in big growing multinational companies funded what they did in Deutschmarks rather than funding their investments from their domestic currency. And as time went on, and this is really at the core of the ERM failure, Germany has had a wicked experience during Weimar with inflation, and Germany doesn't want to inflate. Reunification after the collapse of the Soviet Union meant East Germany, to be integrated with West Germany, had to be brought up largely through fiscal stimulus to build the infrastructure and make Germany what you might call more wholesome and continuous. So you have a fiscal stimulus in Germany and a resistance that's very strong to rising inflation. What that implies is that you have a country like Sweden that's suffering a little bit from the collapse of the Soviet Union, not as much as Finland, but they're under stress because they had relationships up in that part of the world. And they're essentially funding in German for Swedish denominated, what you might call assets. But the problem you have is that when the Germans want to raise interest rates, the scale of the multinational investment by Swedish companies funded by Deutschmarks, meaning the currency exposure, was very high in relation to the reserves that the central bank had. So when the Germans would tighten policy, you could just start seeing everybody trying to unwind these carry trades. And by the way, the carry trades, because of the softness of the Swedish economy related to the end of the Soviet Union and the strength of the German economy related to fiscal stimulus, you had a negative real shock in Sweden and a positive real shock in Germany. So the interest rate differential was narrowing, and all of these people had very large positions. And as they started to cover them, I could see what we call foreign exchange reserves of this, what's called the Riksbank, the Swedish central bank, coming down quite a lot. And by adding to that energy, now as a famous firm in terms of currency speculation after the British pound, Soros Fund Management, what you might call turbocharged that acceleration. And it led to an exhaustion and a decision by the government to devalue rather than maintain the fixed exchange rate that gave people comfort and guarantees, meaning with a fixed exchange rate, they could borrow Germany, invest in something 3-4% higher, and now all of a sudden there was a risk of devaluation and narrower interest rate differential. So we, what you might call, took the initiative. We had built up a pretty substantial position, but then as it accelerated, we added to it, which fomented the acceleration and the devaluation.
You mentioned to me last time that you actually made more money breaking the krona than the sterling.
Yeah, because it was a larger position and a bigger fall off, both. But how would I say, the action that led to the British pound was relatively rapid, like a few weeks. It was, having seen what happened with the British pound, even a couple of months, it was a much longer on-ramp. And because of my previous time at Bankers Trust, I'd spent a lot of time. I'm a Johansson. My family on my father's side is from parts of Sweden. So I'd spent a lot of time there with my dad sailing, and I knew a lot of people there, etc. In an ironic way, I was more familiar with Germany because my mother's family was from Scotland and Stuttgart, and my dad's family was from Berlin and parts of Sweden. So I was very tuned in to the mindset in Sweden. I'd spent a lot of time there, etc. And I think I had more confidence personally than I had vis-a-vis the British pound.
Yeah, because when I looked at it, the devaluation of the krona was about 25%, and the British sterling devalued 15%. So that's a much bigger devaluation.
It actually went beyond that, holding on to the position into the middle of next year. It went down much more than 21%.
I want to come back to the U.S. now. The U.S. dollars in decline has fallen about 10%. It looks like it's going to fall a decent amount more. So you're talking about potentially a similar devaluation as what happened with the British sterling, although without the fixed exchange rate. So I want to come back to the weak dollar because I want to ask you about the present. But just trying to establish your bona fides, because here you are, it's one of those famous dream teams in finance. You, Soros, Druckenmiller, breaking the British sterling and the krona, and you said all over the world. Every time I mention a country, you seem to know a lot about it. So,
by the way, Scott Bessent was also based in London, our now Treasury Secretary, and he was a very important part along with a man named David Smick. David Smick knew the central bankers in Europe very well, and he was from Washington, had worked with Jack Kemp, knew Alan Greenspan and others. But Scott was an equity analyst based in London as part of Soros Fund Management, and he really understood after a devaluation, interest rates would fall and interest-sensitive sectors would do well and the exchange rate would fall, so export and import competing industries would do well. He was very instrumental in the scope and scale of money that we made in the British pound, not just from the currency, but from the other dimensions of it.
Yeah, on the way down and the way back up. So do you think that's what happens in the United States over the next 12 months?
I would say in a qualitative sense, yes, if things stay here, and we'll talk about other dimensions in a moment. But the scope and scale of what I'll call the open exposure of the U.S. economy is smaller than it was in Great Britain. So as a, what you might call, disruption of the whole country, the British pound was much more internationally interwoven. And the United States just has what you might call lots of domestic sectors and non-traded goods and so forth. So I would just say in dollar terms or pound terms or whatever, it might be as or a larger part of money because of the size of the sectors that are affected. But as a proportion of America, it would be slightly smaller because America isn't as trade exposed, if you will, in its GDP as Britain was in those days.
Let me come back to this one. So you worked with Scott Bessent, now Secretary of Treasury. What was he like?
In my opinion, very pleasant to work with, very curious, very lucid, not what I'll call dogmatic, egocentric, or irritating at all. He was a very, very pleasant colleague to explore with and learn from and try to impart other insights to. And I thought he was a really good teammate. And I've known him in years subsequently. For a little bit of time, our daughters went to the same school, and I find him very high integrity and very solid guy.
Everybody I talk to who knows him says that, so it's comforting. Why do you think he wanted to be Secretary of Treasury?
My sense is, and this isn't coming from a conversation, this is my conjecture. I want to be clear about that. But Scott has done lots of things in making money. He's done lots of things like adjunct professor at Yale. And I think he saw, which many of us could see, we are in a stressful, unsustainable situation, and that he could bring his experience and his insights to help heal it. And I think that sense of devotion to public purpose, creating a better platform for his children, etc., was a very powerful part of his spirit.
I get that. So then, how does he get from here to there? Do you have a sense of what the playbook might be?
Well, obviously, he's not what you might call the prime minister. He's a member of the cabinet. And they're in the what I'll call the world of the Potomac. There are a lot of cross currents and stresses and lobbyists. And then there's the legislature, meaning the Congress and Senate and the courts. So you don't have what you might call carte blanche, green light, do whatever you want to do. You've got to be credible and persuasive. You're working identified as a leader, a worthy leader by being the Treasury Secretary, but you still have to collaborate with other people who are powerful in the governance system and understand what they want to achieve and how it relates to what you want to achieve and try to create win-win games.
But I feel like I haven't heard a good articulation of even what it would look like. Obviously, to succeed, you have to compromise and there's trade-offs, but how would you get from here to there if you're Scott Bessent?
I think the interfaces that I would think mattered a great deal is the multilateral institutions like other central banks, the IMF and World Bank, and places where the United States is not a member, the Asian AIIB Bank, which is the World Bank in another region, and learning to work with your counterparts. Finance ministers are the name usually given to what we call the Treasury Secretary. Collaboration with the central bank within your country, and working to create what I refer to as win-win situations. Though I believe that there is a strong sense, this is my Midwestern ghost echoing, that there is a lot of belief that we did lots of things for multinational enterprises that didn't help the American people. And there is a mistrust that you referred to earlier in elite officials. There is a notion that a rising tide doesn't raise all boats. Lots of people are worse off, so a few people made a lot of money. Same thing is now being explored in AI and technological innovation. So Scott, I think, has conveyed that he understands the stress and the unsustainability. I worked with our friend David Smick, who I mentioned earlier, on a movie that came out recently called America's Burning. Is This the Second Civil War? It was about the symptoms of discord and what to do about it. What's the healing process entail? And the only reason I bring it up, not to advertise the movie, but people like Scott are taking on a position, I'll put it simply, when you don't want to see the next Weimar Republic, you want to see a restoration of the democracy and the positive and sometimes romantic vision of the United States. Martin Wolf, the extraordinary columnist with the Financial Times of London, wrote a book which I worked with him on, along with a handful of other people, called The Crisis of Capitalist Democracy. During Donald Trump's first term, and you could see this, Donald Trump, when he was campaigning, say in 2016, I was in Michigan because I was holding a Detroit conference 3 days after the election. And he's doing ads where he's saying, the only people that can fix this are the American people. Please join me. The system is broken. And all kinds of people, whether they believe in the depth of his strategy, insight, or what have you, they said, he's calling it out. We've been feeling this pain, and people haven't talked to us like we matter for a long time. And I think that that sense of despair that led to Trump's election. Trump has this training I have heard from a man named Scott Adams that makes the Dilbert cartoon. He had a whole bunch of little website things which I can share with you, about a man named Milton Erickson, who created a thing called neuro-linguistic programming, and how all kinds of people like Steve Jobs and others were mentored by Milton Erickson's proteges, as well as reading his own writings. And that I came to understand in 2015 that Donald Trump had this training. The famous world life coach Tony Robbins has had this training. But the point is, Donald Trump caught fire in an unsustainable, very stressful time by acknowledging that we were in that place. And now, what you could say is that catnip, that yearning that is satisfied, then has to be followed through with coherent, intelligent policies. I think Scott's joining creates a much higher probability in that regard because he understands the trade-offs and ramifications of this financial plus real economy and global economy and all the intertwined cross currents and side effects. So he can work to create win-win games that are credible. And as obviously many people could see in the Weimar years, Adolf Hitler inspired people who felt abused going back to World War I and the Versailles Treaty, but he made an awful mess out of things. And there are a lot of people who are afraid that America's in a place where it could become authoritarian war zone rather than a win-win leader. And I think this is what you and I talked about once before, Lee Kuan Yew, saying there's a wonderful book that's written about U.S. and China that I want to recommend. A man named Orville Schell, who's a friend of mine, and John Delaney wrote a book called Wealth and Power. And it was a study of how China experienced tremendous psychic damage, going from being a leading world economy to the humiliation that started with the Opium War and ended up with the Japanese invasion. They call it the century of humiliation. And when I read Lee Kuan Yew's various thoughts over time, or Henry Kissinger, and others who he knew, you see a sense that people believe because of the century of humiliation, there's a danger that if the U.S. plays too tough in the world system, this new big economy is going to get resentful and break away. If the U.S. plays leader but gives the other a seat at the head table, then they can be called partners and co-architects, and the Chinese will feel that the century of humiliation is now over and be inspired to do constructive things. I think there was a time I mentioned to you meeting some of the leaders in China when I used to go to the Asian Development Forum every year. And one of those leaders said to me in a private meeting, Donald Trump is screaming at Mexico. He's screaming at China. This was 2016. He said, there's a problem with this. When you have a U.S. Senate advisory committee that suggests to the U.S. Senate that they ought to pass legislation or demanding that China allow its currency to appreciate, or Japan to make its currency appreciate, as opposed to continuing to buy treasury bonds and therefore run a trade surplus, but keep the balance of payments from reflecting that in requiring a change in the exchange rate. And he said, whenever that group, a friend of mine who used to work with me on the Senate Banking Committee was on this committee, his name was Pat Malloy, whenever that group makes a recommendation, you see all the multinational companies, whether it's Apple or Walmart or whoever, lobby the U.S. Senate not to pass legislation to make the dollar fall and the renminbi rise, because that reduces the profit from the plants that are making things in China to be exported to the United States, but are American headquartered multinational companies. And what he was basically saying is, in American monetary politics, the Citizens United, money more than votes, America is not serving. And this leading Chinese official said to me, Robert, I've studied international trade theory like you would get as a PhD, W. Arthur Lewis and all these other people. And I said, okay. He said, it always says free trade can make everybody better off and nobody worse off if you make the adjustments. The United States of America doesn't make the adjustments. Now, I go back on the other side saying it isn't all about America and American lobbyists and all that kind of stuff. There are people in China who benefit tremendously from an undervalued exchange rate and big profits. So unless the United States understands that China is almost 4 times the size of our population, as this gentleman pointed out to me when we started the integration in the early 80s, the per capita income in China was 1/40th of what it was in the United States. So there was going to be what you might call a labor market shock as this unfolded. But there needed to be some adjustment assistance and cooperation. And you probably remember around 2015, 2016, the Chinese put out a thing called the 2025 report. And in it, they talked openly about, well, we'll invite all these people in. They'll set up foreign direct investment here. We'll study what they do, and then we'll go build replicas of that. And then maybe we'll shut them down and go on and have a developed economy, having learned from tolerating foreign direct investment for a time, but eventually it'll all be Chinese. And places like the Council on Foreign Relations, many of the people that were involved in the Biden administration took exception to that. It was a very aggressive, non-cooperative statement initiated by China. So some of the polarity, some of the tension that we've seen is not just America's fault.
For sure. What would have happened if the the multinationals hadn't stopped it?
Well, my sense is this is a little bit where people like Scott are now, which was they would demand a lower recycling into Treasury bills and allowing an appreciation. There have been lots of chapters of this. When Janet Yellen was the Federal Reserve Chairman, I remember reading that she went to China to tell them, you guys got to be careful because we're going to have to start to raise interest rates. And at that time, there were a whole lot of companies that were borrowing in dollars and doing carry trades in the renminbi. And people came to me after she said that because I was experienced in the unwinding of carry trades like Sweden and Finland and others. But she was essentially saying to them, when we start to raise interest rates, you're going to get a deflationary shock in your economy because you'll unwind all those carry trades, which is like a negative monetary shock, and you got to be prepared for that. But right now we're at a different place, which is we've had so much outflow into the United States. I mean, a very good example to study now is Japan, because Japan went through long, long periods of trade surplus and redeployment of the assets overseas. And first, it was in U.S. Treasuries. Then it included direct investment in the Asian, what they call the ASEAN neighborhood, or direct investment in Malaysia and Thailand and other places, and in China. And in I think it was 93 or 94, when the Chinese devalued, it's what led to a crisis in the rest of the ASEAN countries, because everybody wanted to put their foreign direct investment into China, not into the regional countries, and it created an intra-Asian stress. But as I look at it now, it feels to me like what America needs to do. Who's it? The gentleman, I think his name is Mahan, head of the Council of Economic Advisors. I have not met him.
Stephen Moran.
Stephen Moran, yeah. He talked about going up slow, foreshadowing
Gradual tariffs.
gradual tariffs, saying, if you guys don't start changing course, this is going to go, as opposed to monster size
Overnight tariffs.
immediate tariffs, and then we'll rescind them if you back off or if you change. And at some level, that notion of the century of humiliation that Orville Schell and others had, if you go play super tough, the Chinese, who are scarred by the century of humiliation, aren't going to capitulate. They're going to play tough too. But trying to do things that are more gentle in a win-win situation, like that slow climb of tariffs, where you're reorienting things, but you're not devastating and shocking business enterprises all around the world.
It's such an unexpected turn of the conversation for me, because I know you as not a supporter of this type of administration. So how I think of you.
Well, I think there's two sides to that coin. One is acknowledging that we are in a crisis situation is a good thing, and pretending everything was okay was not, because it wasn't true. And it leads to a buildup of tension, and it leads to what I'll call temptation of the next Weimar Republic. I want to see things happen that change our big course and trajectory, non-transient, but really substantial, so that my children can understand why I once admired America, because it's coming back. But I think that tension, once acknowledged, it has to be resolved in a what I'll call game theoretic mind of how to create win-win outcomes, and not to feel like beating up the people who you think caused the pain for your citizens. I'm talking about overseas people are disliked, say, in Michigan or Ohio. Well, if you go beat up those people, people may feel some gratification that they're finally being represented, but they're not being represented in a way that's going to get them out of the ditch unless a win-win approach is taken on.
Okay, let me just see if I can summarize what you're saying. What you're saying is the actual aims of many in the administration were right, but the execution, the way that it's being done, is likely to actually cause maybe more problems because it's not creating a win-win environment to get to the aims that they started with.
And the other thing is, I mentioned this man, Milton Erickson, the neuro-linguistic programming. You can trigger people who are sad that I know you're sad and I'm on your team. But to actually be on the team that's going to, in the medium term, make for a better country, you got to do things that are constructive, not just hoot and holler, demonizing the foreigners and act like they'll be humiliated and they'll accommodate your strength, because those nations need to have dignity and pride vis-a-vis their own constituents, not be looking like they are a subordinate to a rough and tumble leadership of the United States.
So could you give me two scenarios of how you think it plays out?
I think the reaction of many leaders, some from the hedge fund industry and banking, Bill Ackman and the people at places like Goldman Sachs and JP Morgan, may have startled the president. And now he's seeing the negative side effects of having been too strident. And then he'll hand the ball to people like Scott, who understand the impact of policy changes of different variety and let them work to create something that's more constructive. There are other dimensions to this. I think there's a lot of concern that what they call red tech, people who are hawks in the military industrial complex, but also working in Silicon Valley and want big federal grants, just like the defense weapon makers have lobbied. They foment fear and then lobby to get big allocations from the federal budget. I think there's a concern now that red tech billionaires in this world of money politics have enormous amounts of power, and they can get things to fortify them, but perhaps to the risk of America, and even though they talk about it as being for defense, but also the exacerbation of the inequality within America by subsidizing the wealthy and powerful may reignite discord. And I think there is a lot of concern about that now. There's a lot of statistics, Economic Policy Institute, about how since 1985, we're talking about 40 years, almost 80% of American people have a lower standard of living, and about 3 to 5% have an enormously rising. And when you look at productivity statistics and you look at wages in America, wages have been flat and productivity statistics have taken off. And where this is now in a new zone with AI of tremendous tension is people are paying $300,000-$400,000 for college education and are now acutely afraid that they're going to get replaced by machines. And I don't think you want to thwart innovation, but I think you need to have a second dimension of how innovation is deployed in a way that the many benefit. And that role of money in politics plays into the despair and the suspicion and the discrediting of governance these days.
So what does a deal look like with China in a successful outcome?
I would say it's a little bit tricky in the sense that it appears to me, and I've spent a little time in December over in that part of the world and was just at a conference in Rome, learning from people from China about where they are. It feels to me like their education, particularly technological engineering education, AI, and so forth, has accelerated a great deal in the last 5 to 8 years. I saw a study done by an institute in Australia that said in the patent world, the Chinese are now equal to and sometimes surpassing America in the number of new creative patents. So I think you're going to see China continuing towards what I'll call the intellectual development, and you're going to see fear about whether it'll be deployed for military uses that make them a more formidable adversary of the United States.
I mean, it will be. It's going to be.
The other trick here, though, is, and a lot of the people I know that are working arms control and disarmament will tell you, everybody knows that a mutual destruction is horrible. So what you might call the deterrence, even between the United States and Russia, is very effective because they're both aware of how much they'd be hurt and how much they could hurt. But you don't want to see what you might call stresses in political economy about who owns property rights and who makes things and so forth, leading to a military conflict that's so dangerous. Because you get lobbyists, say, I talked about red tech, you get lobbyists in America saying, the Chinese are developing this stuff, we got to get ahead of the curve again. And maybe that's true for safety, or maybe that's a way of marketing for profit that makes the world even more dangerous.
Well, let me go back to this. What does successful partnership with China look like?
Well, I think reestablishing mobility of people, working on deployment of money into U.S. Treasury securities, and maintaining, therefore, an overvalued dollar cannot be sustained.
Does that mean revaluing the renminbi by 20-30%?
I don't know in the sense that I'd have to explore that in the context of the sectors that would be damaged and the sectors that could still thrive. 20-30% is quite a big scale of adjustment.
But you can't weaken the dollar if the renminbi is pegged to the dollar and then it just keeps declining.
And we are seeing, there's another dimension to this, which I want to come back to, which is the U.S. debt to GDP ratio is very high now. If the U.S. ceases to be a reserve currency, the availability of funding for our deficits goes down, our interest rates go up, the interest on the debt, given the high debt to GDP ratio, starts into a spiral that can lead to the need for restructuring or a default. And that fear of a restructuring, a default, reduces the likelihood that the U.S. is a reserve currency. My former neighbor and friend Ray Dalio is writing a book that will come out, I believe, in June, so about a month from now, on how countries go broke. And I think the United States is at a threshold with a debt to GDP ratio of 125%, that having the U.S. aggressively diminished as a reserve currency could lead to a spike in interest rates and a refinancing, because so much of the U.S. Treasury debt has now been very short term, 2 years and under, that you could see an unsustainable spiral take place. And I know a lot of people now are talking about the so-called BRICS, Brazil, Russia, India, China, South Africa, and more, going to gold. We've seen gold going up. We've seen all kinds of questions about what will be the reserve currency of the future. And there's some anxiety about the Japanese still holding huge amounts of treasuries, and that maybe the Japanese currency needs to appreciate as well.
Well, it's really at all-time high, what dollar is to the yen. But I'm with you on a lot of your aims and a lot of your values, but I still don't see what the policy implementation is to get back on track.
When I look at the news, what I see Scott Bessent doing is talking to the IMF and so forth, saying, you don't just talk to the deficit countries, you got to talk to the surplus countries too. We got to create a re-equilibration, a balance point. I think seeing Chinese or Asian or even some Latin Americans keeping their currency low and running on export-led growth is critical to what we still call the swing states in America, whether it's Georgia or Pennsylvania, Michigan, Wisconsin. There's a very strong feeling in those places that the international economy is what's devastated them. And we've got to alleviate that stress to stabilize America. But how we do that without destabilizing other places is the nature of it. And that's where the head of the Council of Economic Advisors talking about a gradual climb. Mark Carney, who I know I've worked with in different contexts over the years, Mark is saying, we're not going to take this rough and tumble punch from America. We're going to resist that. We're going to fight back. And he just won as prime minister for what I'll call standing strong. I think if the U.S. softens, they can figure out things that are closer to win-win games or longer time horizons for adjustment that don't create such acute distress in some of the other countries, but show that America is on the right path.
So if you were advising my company, let's say we have a lot of interest rate exposure, we have real estate, we have different investments, and say, okay, what does the U.S. economy look like a year or two from now?
I sense a lot of concern now relates to two things. People like Warren Buffett are talking about the ratio of stock market capitalization to GDP is off the mark.
Way too high.
The pendulum is way to one side.
The Buffett indicator.
So you need to rebalance. And the second thing, and I alluded to this before, but the former head of the Office of Management and Budget under the time of Ronald Reagan, David Stockman. And Stockman runs a website now called Contra Corner. And he just wrote a book about how to take $2 trillion out of the budget deficit. And what he's essentially saying is unless we get the budget deficit under control and these interest rates start to go, we'll go into that spiral of the interest rates leading to a bigger deficit, which leads to an eventual restructuring. If you have that, because number one, the risk premium and interest rates would go up. And secondly, the deflation from cutting other spending or restructuring debt, creating wealth losses, would turn eventually on all investment markets. So I think we are in a very stressful time because we basically had a big boom from 2010 to 2024 of rising equity, very low interest rates. And if that not so much unwinds, but rebalances, it either takes price movements down or time until the economy grows up into it and changes the ratio. But the problem is the economy depends upon finance to grow. But I think people reading Stockman's newest book and understanding Ray Dalio's sense that he puts together in his new book, where he talks about you have an international crisis and you have a domestic crisis and you have a reserve currency that has a very high debt to GDP ratio. And then you have the technological change related to AI and so forth. And then you have the challenge of climate change. How are we going to integrate all of these things? Ray is very deep in understanding the sequences of economic history. And his new book, I think, illuminates things that all come back to your question about what happens to real estate. But what happens to real estate is a symptom of what's going on in other places that are out of balance.
I'd rephrase the question, just what happens to investments and GDP, unemployment. What's the U.S. economy look like in 1 to 2 years? Sounds like we're at a turning point. It depends on the success of this rebalancing strategy. And you're saying it could go either way.
Well, I think aggressive, frightening policy raises risk premiums and makes it more likely that there's a slowdown in the United States and around the world. I think a thoughtful, conceptual, win-win strategy, like someone like Scott Bessent can envision, diminishes those risks of downfall and excessive financial injury.
I often say this to my friends who we debate this policy question, and execution matters. So you send Scott Bessent to accomplish these aims, you might be successful. Someone else goes too aggressively or alienates the other side, you can't get to a good deal, and then it gets worse.
There's two sides to that coin. One is just what you described, but the other side is if Scott does stuff that's cooperative, do the wounded people in the Midwest say, oh, they sold us out? In other words, like Donald Trump did, say, these are the enemies who want to kick their butt. Those people feel relieved because they haven't been taken care of in 20 or 30 years. And lots of people are now very concerned about the expense of education. There's an enormous concern in America, in a comparative sense, about the cost of healthcare as the baby boom is aging out. America, according to the World Health Organization, provides the 32nd best quality of healthcare. Compared to the OECD nations, our prices are twice as high. So could you cut prices in half and have better quality? That matters when you're thinking about Medicare and Medicaid and a baby boom aging out. So the ratio of retirees to the underlying workforce is at an all-time high. So I think there's some huge structural challenges for the United States related to pharmaceuticals, nutrition, and hospitalization and all of these areas.
So what should I be watching to see if this is going to break to the positive or to the negative?
Well, you have different dance cards. I would watch what the people in and around Scott Bessent and the feedback he gets from other cabinet ministers and what acknowledgments you get at congressional hearings. I would watch the Office of Management and Budget quite closely because of some of the fears. I was talking about the interest rate dynamic and funding and the high debt to GDP ratio. But when you put that baby boom healthcare thing on there, on the other hand, if after we've subsidized Wall Street and done all kinds of other things, and the military industrial complex and all the suspicion of K Street lobbyists, if you cut Medicare and Medicaid when people have spent 30 or 40 years of their life contributing to Social Security and Medicare, that's going to make, as I call it in the movie, America burning. So I think there's things to watch on both sides. My sense is that you also want to watch what the president says, because as the leader, people take seriously what he says, and it's probably a reflection of his own instincts and what he's experiencing within his cabinet. It felt like some of his cabinet ministers and some outside powerful people, like Jamie Dimon and others, tried to get him to calm down a little bit with regard to the announcement of tariffs. I would say if you had some settlements in the Ukraine, in Gaza, and a treaty vis-a-vis Taiwan, that might create the basis for reducing military budgets and helping, as David Stockman said, getting rid of $2 trillion a year. But I don't know if that's viable or that's feasible. When I mean feasible, I'm talking about lobbying power.
Let me ask you a final question here. So if you were a benevolent dictator of the United States, you could implement whatever policies you wanted to address these problems you've been outlining, what would they be?
Well, I'd probably, as I just spoke about, do several things, but I'd go to the military question and saying, right now we can't afford this. So let's do things with the Ukraine. Let's do things with regard to the Middle East to create stability, create peace treaties, create nuclear disarmament. A lot of the wealthiest people in America keep their money offshore. I think if you want to reduce the budget deficit, you can't have the people that make all the money not pay any taxes, or the stress on others becomes acute. I would want to take on, not in the short term, but in the medium term, the Citizens United decision about the role of money relative to the role of people and common good and therefore votes. I think that would help rebalance the republic. I think the medical industry and private equity related to medical industry needs to be scrutinized for why these costs are so much higher than what is even more successful in other places. We always talk about the free market economics. If you leave it alone, innovation will raise us all up. So if you say, I've got something costs twice as much, but it's 5 times as good, well, maybe that's better value. But when something's twice as costly, like our healthcare, and we're at the bottom of the list for the quality, we got some changes that need to be explored, and particularly as it relates to federal financing. I think the final recommendation goes back to the experience that we've had from the time of the savings and loan bailout, that what some are saying is that we have the mother of all moral hazards. Banks can take risk, and if it is good, they keep the upside. And if it goes bad, they get bailed out, and the taxpayer assumes that responsibility. It affects how the Federal Reserve can operate relative to inflation in the goods market, because if it resists too much and it leads to distress, like the SVB episode, then it leads to the need to bail out.
Silicon Valley Bank.
Yeah, Silicon Valley Bank. So you have a lot of questions now about how the incentives that are created in a highly leveraged financial market, and whether that is healthy or even safe for the health and well-being of our country. And then you have an international system where the Bank for International Settlements has worked during previous crises in conjunction with the United States to create what I'll call dollar credits around the world, so that you don't have liquidation crisis of people using the dollar as their reserve currency. But I think looking at that system and looking at the benefits and the costs, and then looking at the distributional ramifications within the United States related to this stress that we're now talking about, China and globalization. But I'm saying the sources of this stress can be many different aspects. And I think my friend Alex Gibney, I mentioned, and David Sirota did an Audible program. There was an audio book, about 5 episodes, called Meltdown. What they were talking about was the meltdown of finance. It was the meltdown of confidence in governance when we kept bailing out Wall Street and not taking care, say, of the Rust Belt and things like that. And they didn't prescribe a cure, but they alluded to the dissatisfaction that many citizens would have related to, say, the federal support for education not being there, but the federal support for aggressive bank speculation is vivid. So how you recompose the policy structure of the nation so that it feels like it's morally grounded It views the economy as a tool, not as a deity. I think it's important.
Well, it was fabulous to see you again.
And likewise, I think your curiosity is a gift for us all.
Well, at least keeps me up at night. So I really appreciate it. It was fabulous, and onward.
Hope to see you again soon.
You've been listening to Onward, featuring Rob Johnson. My name is Ben Miller, CEO of Fundrise. We invite you again to please send your comments and questions to onward@fundrise.com. And if you like what you've heard, rate and review us on Apple Podcasts. Be sure to follow us wherever you listen to podcasts. For more information on Fundrise-sponsored investment products, including relevant legal disclaimers, check out our show notes. Thanks so much for joining me.